let me see if we are live. It always takes a few seconds.
Mhm.
Hey everyone, and thanks for jumping back into the cryptoverse. This is our weekly DCA live. So we do this every single week. We just switch whose channel we do it on. So this week we are going to be talking about a lot of different things, not just Bitcoin. We want to talk about Bitcoin, stocks. I even want to talk a little bit about real estate because I think Rob maybe has some experience in real estate. Is that right, Rob?
Yeah, some.
Yeah, a little bit. So we're gonna go through a lot of questions. We'll probably keep it a little shorter this week, just because I have somewhere to be at the top of the hour. So if you're new here and you want to make sure you catch these every single week, go subscribe down to James and Rob in the description below, and you'll be able to figure out the DCA live next. Where is it going to be next week? Will it be on Rob's channel or no James?
My
It'll be on
place. Yep.
James channel. So James channel next week. So make sure you go subscribe to them. So the questions that we're going to ask today, and we're going to go through them fairly quickly, and I have 5 of them. The first one is, Bitcoin is showing a little bit of relief. I mean, like we're still below the 200-week SMA, right? So let's not get Forbes on the line quite yet. But the question really is like, how much relief do you think we'll see in the short term? Do you have your eyes on any specific targets or whatever it may be? The second question will be about the stock market. The stock market, I think I was reading that it was like one of the, if not the worst, or one of the worst first halves of a year that we've seen either in a long time or forever. So I'm curious.
Since 1970, 50 years.
Okay, 50 years. So I guess I'm curious about what your thoughts are on, the second half. Do you think it'll be a continuation of the first half, or do you think it'll be sideways or up? What do you think? The third question, I want to circle back to, alt performance against Bitcoin. The dominance is up recently, which I certainly like to see. But of course, there's always some altcoins that outperform Bitcoin, even when the dominance goes higher. So we can maybe talk some about that. And then the next one I want to talk about, maybe James will have some insight here, is more on the precious metal side of things. Like they did really well in prior decades during periods of high inflation. Right now, they're not doing so well. Is it because the dollar's really strong? Do you think it's because they're finding more deposits of metals and they're just, the supply is going up too quickly? Or do people just not care about it anymore as a hedge? And then the last question will be about the real estate market and the fact that, we have been seeing a decent amount of headwinds recently with rising interest rates. So it's making it a lot more difficult for people to get a mortgage, or if they are getting a mortgage, they're getting a lot less house for their money. Do you see a bear market coming in the real estate market? And I know, this channel, and we don't really talk about real estate a whole lot, but I'd have to imagine that the real estate market going down would affect risk assets because, a lot of wealth is tied up into real estate and whatnot. So those are the questions. We'll try to go through them as quickly as we can. James, we're going to start with you on the first question. I know you're always looking at some of these sort of short to medium term moves with Bitcoin and whatnot. So we've seen a bounce off of the recent local low. Remains to be seen if it's the actual bottom or not, but off 17.5. What are your thoughts here on the short term? Do you think we're going to keep heading higher? What are some areas you think might provide some resistance?
Yeah, it's a good question. So I was waiting for an opportunity to do a little tiny short on Bitcoin, and that I felt was about 22,125. So far it's kind of working out, but I think the 200-week moving average is a key level of potential resistance. But if we smash through that 22,125, I think we could go to the next level, which would be the 25 to 26K. Not slinging hopium here, that's just the nature of how the chart looks right now. But the reality is our destiny is in the hands of 3 things: the dollar index, which looks to be toppy at about 107, which is very good. Oil, hopefully, if it can rest under 100, would be good. And the Fed hike. If we get 50 basis points instead of what everybody thinks is 75, we'll rally really, really hard, which is good. But the other thing as well is kind of a little bit confusing, is we keep getting these kind of macro type reports, and people believe that the job market is just fine. But I don't see that. I think half of executives surveyed recently said 17% are cutting jobs and half have higher hiring freezes. That's 67% are not bringing on any more, and 70% are cutting of that 67%. So, more than two-thirds of executives are cutting expenses, including marketing and travel and all that stuff. So, and also investors are cutting back. So I think we have more gray clouds ahead of us. This is a kind of like a mini bear market rally, and that's what I see right now.
Yeah, it's interesting.
Would you?
The Fed raising rates is certainly something we probably should be talking about this week, even though it wasn't in one of my questions, because it's coming up relatively soon. Uh, Rob, what do you think? I mean, are you in general agreement with James here? The 200 week is probably the first area to watch. See if we can get back above it. I put out a tweet earlier saying, like I remember the good old days when we held support on the 200, not resistance.
Yeah, man, I don't. I mean, I can I can agree to that, but I think we both know where I think we all know where things are going right now. I know there was people were ecstatic because I mean we had a nice little pump here for the Bitcoin and the crypto market. We're above 1 trillion. Of course, we keep bouncing around, and the weekend's coming, so I fully expect that to drop. I could be wrong. Hope I'm wrong, but here we are yet again. So like, I don't feel like the narrative really supports much of anything else. I don't see how the Fed's going to pivot anytime soon. I don't see how the inflation is going to go down dramatically. And I don't see how, I mean, the unemployment came out and we're at the same point that we are last time. So the narrative still remains the same. Until the Fed pivots, I don't see a thing. I think we'll see fluctuations, but right. I mean, I think to me personally, I know I'm not very popular with my outlook, but I just feel like this year is shot. And that's just that's where I stand.
Well, I mean, the last 6 months, I think, have proven that outlook to be fairly accurate, even though it's not as popular. Hopefully, we'll get some relief in the short term. Hopefully, we can get back above the 200 week, like James was talking about, and we can make our way back to 25K. And maybe I'll go ahead and skip the second question and come back to it later because it's sort of in line with question number 3, and that is, the dominance of Bitcoin has sort of been all over the place. Not really, not just recently, but I mean, for the last year, we've essentially just been between like 40% to 48%, and now we're sort of going up. Do you guys see Bitcoin leading a potential rally? So like, assuming we get back above the 200 week, do you see Bitcoin leading that, or do you think people are just going to go back into altcoins once again? Rob, what do you think? I mean, I know. I mean,
all right.
I'm just curious because, like these alt Bitcoin pairs, I got to say, I mean, like most of them are in macro downtrends, but I've also lived through bear market. You have too, right? You're in the 20, you're in these past bear market. And there's always a couple of altcoins that kind of outperform. What do you think?
Yeah, man. I mean, like it just, there's no real point to get into like heavy into alts. There may be some gems out there, but it's like, I mean, if we have learned anything lately, it's about risk management. And I think if you want to do that, you can do that. There's gains to be made. I'm just not that ballsy to go out there and go, you know what, let's just go all in on this one. It just doesn't seem natural to me. And like when I take a look at it, you would think that it's a weird thing. You would think that Bitcoin dominance would go up. I know, Ben, you've been talking about it, but we're kind of stuck for a while now. What are we at? 44?
44. Yeah, we're still at 44%.
Yeah, and it just seems like we're just kind of in that range.
I should say we're at 44% including stable coins. If you don't include stable coins, we're at like 52%.
Okay, that makes more sense. Yeah. So like, I mean, it always kind of works like this. And I know people will say, well, this time it's different. That's like the 4 worst words in finance. I just think it's the same thing. Like Bitcoin will, leads the rally. The alts come up strong. Bitcoin falls down. People say Bitcoin's for boomers. They forget about it. And everything else crashes and the cycle repeats again. So right. I think it'll be the same thing yet again. But the real question is how much does it lead it and how much does the Bitcoin dominance go up? That's, I think, the bigger thing.
Right. James, what about you? I mean, are you looking mostly at Bitcoin at this stage, or you still have your eyes on some potential alts that you think might outperform it?
Well, I'm doing a little bit of scalping right now because there's still, I do believe we're not out of the woods yet, but it's easier to kind of play these ranges with the extreme volatility we have. So that's kind of the big focus. I always talk about the floor of 39 Bitcoin dominance and the roof
Right.
being 51. We're kind of right bang in the middle where we've been hovering around. What's really interesting, so if you look at the top projects out there as they compare to Bitcoin over the last 30 days, I mean, the worst performers of all the top 25 that I look at heavily, you have the third worst is Bitcoin, and then the second worst is Cardano, and third is Ethereum, all down 32, 28, and 26% over the last 30 days. And you compare them to other alts, I mean, there's things like Cosmos that are positive for the last 30 days. Matic has come back a lot. Solana's come back a lot. Avalanche is still down 17%. But what's stunning to me is the fact that people are still degenning into alts. And considering what Rob said with risk management, it's like nobody cares. Everybody's still the same way that they were last year, which is staggering to me. I thought people would have kind of gotten away from that. I know if you look at some of the scam coins like Hex and others, they've really hit the wall hard, and the Cadenas, the stuff that we never liked here. But other names are really having a lot of momentum right now, which is spectacular. So I think it's as if altcoin seasoning is happening behind the scenes for select names.
Yeah, and then one thing I want to add is about, like James says, the degen plays. There's a service I use called CryptoQuant, and I'm always checking the leverage ratio. And today it's at the all-time high over the last of all time. And this is going back to when it first came into existence, which was in 2019. And so, yeah, I mean, there's some people who out there are going, I know exactly where it's going. And they might have that crystal ball. I don't have that. But those leverage plays, I mean, some people are going to get rich. A lot of people are going to get wrecked, and it's going to kind of screw up the market for a while, I think. But that's just where we're at. That's the name of the game in these markets. But it's crazy. All-time highs right now, leverage.
Yeah, well, I mean, I think one of the reasons that some of the coins are up more in Bitcoin over the last 30 days is because they also crashed a lot harder from that local low. Because over the last 90 days, only 9 coins in the top 50 have outperformed Bitcoin. And so, but you're right. I mean, like, if you're doing maybe what James is doing, which is not what I do, but if you're scalping, like if you're doing that kind of stuff, some of those plays can be really worthwhile if you're able to, I guess, like, time those bottoms and then sort of scalp, just scalp a little bit here and there, right? That's not my wheelhouse though. I do want to talk about some other markets. I mean, like, I know that we mostly talk about crypto and whatnot, but I can't help but think that having a more broader view of overall markets is only going to be helpful, even in helping navigate crypto. So, the stock market, again, we've seen it's down, in the first half of the year, worse than it's been in what James was saying, like 50 years. What do you guys think for the second half of the year? I mean, I know there's been some speculation from some people that we'll have some type of relief in Q3, followed by it coming back down in Q4. I've seen people talk about it's just going to go straight down, like, that down only mentality. I think even Michael Berry, I mean, he was putting out I think he deletes all his tweets, but I think he said something about how he thinks we're about halfway there in terms of how far down the stock market's going to go. Do you guys agree with that, or do you think, obviously, is it going to be down only? Is it going to be like a bounce and then down, or has the market already bottomed? Rob, what do you think?
First of all, Burry from The Big Short, right?
Yeah, Michael, the guy who cashed in on the real estate crash.
Right, and hey, I can't take away, he was right on that one. He's been writing some other things, but it seems like every time I see a tweet from Michael, it's always the most negative, cataclysmic thing that's going to happen. And I can't put faith into someone who cries wolf every single time. It's the same thing with Goldbug. What's his name? I always forget his name.
Peter Schiff.
I don't really know what that is, but Peter Schiff. So the whole thing is that, I mean, if you take a look at the narrative, is it going to go down farther? Probably. I think people talk about how it's priced in, especially with the Fed rates coming in, and it definitely could be. But I mean, it just depends on what kind of legacy that Jay Powell wants to really leave. Does he want to be Volcker-esque in the 80s, or Volcker's predecessor, who was Burns, who didn't do squat and was leading everything into like super high inflation to a depression in the late 70s, early 80s. So I think he's going to want to do Volcker. He's going to want to push those rates up. And what is that going to do? It's going to start to drop the market. The market goes down. I just think like the way I see it is we start to go down, we go sideways, a little bit of pumps here, we go down again. And then towards the end of the year, we start to recover a little bit. And then we see some sideways action next year. But we don't really see anything big until we're looking at 2024.
Right. I mean, that's what the next Bitcoin halving is.
That's
yeah.
Yeah. But for guys like James and the traders out there, there's massive opportunities because you guys love volatility. And that's not my thing. I don't really get into it.
Well, I think too, I mean, you think back to 2019, I think a lot of it's just sort of considered a sideways year, but Bitcoin once, during that year went up 4x from its low. It's still a decent return. I'm sure a lot of people today would love a 4x return on some of these big names.
Yep.
But yeah, I mean, I think you're right. I think that you're completely right on a lot of the stuff. It'll mostly be sideways, choppy behavior next year, and then hopefully going up for another bull run if that.
Yeah, but I'll remind everybody, don't take my word for it. I believe I called for 150K Bitcoin in 2021. So hopefully I'm wrong.
Yeah, well, I mean, it's one of those things where you take the information you have and you try to provide as good of a perspective as you can. James, what do you think? I mean, second half of the year, we're it's July 8th. What are your thoughts on the stock market for the rest of the year?
Yeah, so mathematically, stock market goes up 85% at a time. So historically, it's a good bet to be bullish more often than not. But it's very important to look at earnings estimates. And if you exclude oil and gas consensus earning estimates, there's been a slight downgrade in earnings expectations, but nothing of the magnitude you would expect if we were in an economic recession. Now, many believe we are not in a recession. I do believe we are. I've been talking about it for 5 weeks now. All the data tells me we are in a recession. Q2 will be negative growth, just as Q1 was 1.6% negative. That's 2 in a row. The question is, how deep will it be? Now, therefore, I believe earnings estimates risk definitely being revised downwards. Remember, consumer confidence is in the toilet, and the consumer spending makes up 60% of US GDP. Therefore, they're not spending. Therefore, GDP is going down. It's that simple. But the real issue is, the economy. We've got record inflation levels. Again, no consumer confidence at record lows. Highest mortgage rates since '87, I think. We've got negative wealth effects from traditional markets and crypto markets. When people look at their 401ks, et cetera, it's like, oh my God, worst as you said, first 6 months and 50 years. That hurts everybody. It makes everybody revise everything. So the question is, yes, I look at disruptive recession-proof stocks that are out there, things that do well regardless, things like Tesla, things like Google, and they just continue to plug along and they don't have any problems. And the other key factor to look at is S&P 500 average earnings. I think the average PE over the last 25 years was 17. We're now at 15 and change, which means the S&P 500 is undervalued. But remember, the P is already beaten down.
Right.
If the E falls, that PE ratio could scoot back up.
Right.
So that's what we have to watch.
Okay. Yeah, I mean, I agree with that. The E is the important part right now. What's going to happen as we get further in it? And we've seen layoffs. Some companies have laid off some people. I guess the question is that going to continue with this recession?
Yeah, well, the other huge problem is the strong dollar hurts American international companies too, right, like NVIDIA and stuff. So that will also be another pain point. So this is why we're not out of the woods yet.
So this brings up, sort of the next question. James, I'll just start with you on this one because it's sort of just going off that same idea. Historically, gold and silver have done very well during periods like this, and right now they're not really doing that great. I mean, they're not doing altcoin bad, where they're like down 85% or something, but like they're down a few percent here and there. Do you think that's because of a strong dollar, or do you think it's because of more supply, or is it because of the war? What do you think? Like what do you think's causing precious metals sort of lag behind?
Well, it's shocking because if you look at gold just tanked over the last week. I think it was at 1840. It fell to 1700. Now it's about 1740, I think. Um, and again, as I said many times, gold has the most beautiful macro backdrop it's had in 30, maybe 50 years. And technically, you could argue it's in an 11-year flat market or long-term bear market, depending on when you pick the actual point. But I think gold is down 8% over the last 4,000 days. And if you remove the 14% hurdle rate, which is the minimum return you should get on your money if you have it invested in the stock market, you are losing a lot of value holding gold over the long term. It is not an inflation hedge by no stretch, despite the fact it should be. And I think, there's a lot of questions about this Uganda gold deposit find. Is it true? Is it not? Is it exaggerated? Who knows? But there is gold in the earth. It just needs to be dug up and, mined correctly or polished or whatever they do with it. I'm not into gold mining at all, or gold, never have been. But the S&P 500 over that same time frame for gold is up about 240%. So the question is, what do you want to be in? I don't know. But there are other commodities that are doing a lot better, but we've seen massive volatility as well in those, and they're all down about 25% off their highs. In fact, I think it's 28%. I think the commodity index are more off their highs than technology stocks, which means they shot up real fast, but they fell down real fast. So these things are actually trading like meme stuff. So you look at your nickel and your copper and stuff.
Yeah,
silver at 19 is shocking. So again, it's not my...
We talked about, the crypto market eventually becoming less volatile like stocks, but it kind of went the other way, right? The rest of the markets became as volatile as crypto to some degree. And oil's down recently, so it's back up today a little bit.
Down.
But yeah, it's currently at 104, 105. Rob, do you kind of, do you have any insight into we could talk about gold and silver commodities in general.
Sorry, go ahead. My grandson talking to me.
Oh no, I was just saying, do you have any insight into any more insight than to add to what James said about gold, silver, and commodities in general?
No, but there is one thing that always confused me about gold and silver. Why are we all on the same team? I think the savings account for 2022 moving forward would be gold, silver, Bitcoin. I never understood why there was always the gold bugs versus the crypto people versus traditional equities and everything in between. And I always just thought that there should be no reason why. And then I know people would say like, well, you got to hold gold to the store of value. Like my brother told me like constantly. But we see that it goes down, but you can still hold it. I think we can still get along because we don't want to get out of the system of this constant money printing. That's the only insight I have. And that's one of the reasons why I hold a little bit of gold myself, just because I think, why wouldn't I? So that's the only thing.
The enemy of my enemy is my friend, right?
There we go.
Yeah, but Rob, you're dead right. Everybody should get along, and there's a lot of toxicity out there. Even people in crypto are fighting against people in crypto. So you're dead right. But everybody should be able to choose what they believe
I agree.
is best for them.
I agree, but there's also this sort of element of it all being a zero-sum game. So you're taking money from someone.
That's true. That's true.
But I wanted to talk about the real estate market, which I don't even know if we've talked a whole lot about real estate on here. And real estate is like the one asset class that I basically don't have much exposure to other than like what I personally own. Like I don't like, I'm not invested in it other than for my personal stuff. What do you guys think about the real estate market? Because that would be something that I could see myself wanting to get into. Do you think we're headed for a bear market in real estate? One of the things we've said before is don't fight the Fed. And with the Fed raising interest rates, does it not price out people from getting those mortgages at one? Or do you think that institutions are just going to keep buying up real estate and keep these prices, or large companies and keep the prices elevated? Rob, what do you think about real estate here?
I think it's not the time to buy right now. Obviously, I think we just what was it? The average mortgage rate right now is 5.8%, somewhere around there for a 30-year fixed. Mm-hmm. And then it just keeps going up. And the thing that we see, I was on this panel on Twitter Spaces, and they said, what do you do during inflation? And people were there and they were talking about what inflation is and how it all works and the negative parts of it. I'm like, in all honesty, inflation, when all the prices go up, that's when you're happy that you're in another, I mean, you're diversifying other asset classes. Because a lot of people are just in crypto, or they're just in stocks, or they're just in gold. I never understood that. I think if you diversify, when one goes down, hopefully another one goes up. And here's a prime example, because with the housing market, I mean, we saw increases, I mean, dramatically for our houses in Houston. And when those house prices went up, I mean, it was great to do the short-term rentals, but we were like, we got to sell, because this is like, these are crazy prices. And that was the time in December or January. The thing that concerns me now is that there was this little snippet that came out, a little graphic that talked about just in Phoenix alone, just a city in Arizona, Phoenix, Arizona, that talked about the inventory. And around this October, November, they had inventory around 6,000. Then around March, April, it was like 3,000. This was active listings. Mm-hmm. And now going into June, July, it's over 10,000 active listings. What that means is you had a lot of builders who said, wow, we got to jump on this now. And they built a ton of houses. There is a boatload of houses right now available. And of course, people are snatching them up, but at some point that's going to slow down, because as the rates go up, what people look for in houses, they just say, what's this going to cost me per month? As you know, as it pertains to my actual income. And usually you're looking for like 25, 26%, but right now it's over 31% of the average US householder's income. And that means they get priced out of those houses. So what does that mean? It means that they can't buy those houses. The prices have to come down, and the builders, and of course also the loans that they probably took out to build those houses if they weren't flush with cash. Now it's hard for them to get to pay off those loans, just like we see in our space. And what does that mean? The prices go down and down and down. Does that mean it's going to happen tomorrow? No, but I think in the next 12 to 24 months, you're going to see some pretty cheap houses. And I think if you had cash on the sidelines, you can put it anywhere you want to, in crypto, in gold, or in equities. But what me and my wife always look at is property. And that's one of those things. It's also great for tax purposes, and just it's pretty good if you're not just using it for yourself. And like I said, rentals and things like that. So this is not the time to buy, but it's coming.
You know, I know a lot of people, like personally, and they always like swear by real estate. You know, like they talk about how great of an investment it is, and how, you know, like they've done really well in it. But I feel like for millennials, the opportunities. I think a lot of millennials are hoping the prices go down, because they've just been kind of priced out of a lot of things. James, what do you think about the real estate market? Do you follow the real estate market closely?
Very. And what I've always done is I've always believed in thirds. So portfolio should be 1/3 real estate, 1/3 disruption, and right now 1/3 crypto. That's the way I manage my portfolios. Make money in the market, buy real estate, wash, rinse, repeat. And that's what I've always done. Now, the math is pretty simple regarding real estate. A lot of people read into it too much, saying, will it fall? How much will it fall by? Well, property went up 20% per Case-Shiller in 2021, all across the board. Some places went up 40%, some places went up 10%, but on average, more than 20% gains in 2021. Right now, if you look at the mortgage rates, like around places that I look at very carefully, you've got, say, $800,000 homes are dropping $100,000 in 90 days. That's a big chunk. But the problem is financing costs have doubled. So if you bought a house last year with 10% down, like 50,000 down, you borrow $450K, you could have got a mortgage at, say, 3.25%, even with average credit. Your monthly payment is $1,958. Now, if you have mortgage rates at 5.5%, which is kind of really doubling, you can only borrow, with that same payment, only borrow $345K. So your price before is a $500K house. Now at the same 50K down, you can only buy $395K, and that equates to exactly a 20% haircut. So that's where we are. So I do believe real estate will fall by 20%, but typically it's short-lived and it lags the stock market crash by about 6 months. So we're 3 months away, maybe 4 months from seeing the bottom of real estate. And real estate's also seasonal. So people don't buy between November and end of January. Mm-hmm. So that's a good time to buy, good time to snipe. For those out there, those millennials are looking to buy their first castle, save some cash, make some money, and be ready.
But I hope the bottom is not. I hope it's further away than 3 to 4 months, because it's not going to give me enough time. But I guess you take what the market gives you. Um,
Yeah.
I
But it depends how many dark clouds there are, and if the Fed continues to jack rates like many expect, like 4 more hikes of 50 to 75 basis points before year end, I don't believe in that. I don't think it's mathematically possible. But if that does happen, you're going to see real estate fall probably closer to 30%.
I mean, I'm kind of hoping it goes into a bear market for the next at least a year from here. But I guess I'm selfish in the sense that I'd like the opportunity, but if it doesn't present itself, it doesn't. We don't really have much more time because I actually have to get going. But there were a couple questions. We'll go ahead and ask. There's one really pressing question, and it's for Rob, and it is: if the Fed pivots, will you jump in your pool?
Me and Ben were just talking about this actually. If the Fed pivots, will I jump in the pool? Oh man, that's a good one. Because I always said I would jump in the pool if it was 100K. And I'll tell you this: if the Fed pivots and Bitcoin goes up by 20% in a 30-day time frame, yeah, I'll jump in the pool. Big
All right.
cannonball.
All right, it's locked into YouTube history now. So
Yeah.
let's
I
see
do
if we
that.
can get one more question before we go. Someone says just jump straight into the green screen. There's this joke that it's just a green screen behind you.
Well, I'm in my mom's basement, so I have to
Okay.
put the green screen up.
All right, let me see if there's any other questions. I really don't even see a whole lot of questions even on here. I mean, there's people talking about various platforms. I mean, I feel like in general, you have to be careful with these platforms right now because you really don't know, which ones are going to be solvent in a crypto winter. So I think that the general recommendation right now is just to be very risk off, very
Take it all off.
yeah.
Take it all off. Put it in cold storage. Do not leave anything anywhere. You can control it. It's not that hard. I had a 78-year-old message me and saying, I thought it was so tough. Follow the videos, very easy. Even my grandson could do it. So
Yeah, I don't really see any other questions. It looks like people are just talking about Rob's pool and if he's going to jump into it or not. But
that's good. I'll take that.
All right, yeah, I think that. Oh, here's one more question. Last question. We'll run it on this. How does Mt. Gox potentially affect things? The thing with Mt. Gox is it's funny because I feel like it just seems like every bull market, even in 2019, is like there's always something about Mt. Gox. And then it
Yeah.
ends up getting delayed for another year, and then we talk about it again. What do you guys think? I mean, do you have any thoughts? Do you think it'll affect the market, the release of the crypto that from the Mt. Gox suit?
Yeah, my take is I think there's 140,000 Bitcoin. People have been waiting so long to get their hands on it. Are they going to sell at the bottom? No, I don't know how they're going to disperse them though. That's one thing that I've heard mixed reports. Is the executor of the estate or whatever going to dump them into cash and give people cash? Or will they parse them out Bitcoin? If they do parse them out Bitcoin, there's no way that people are just going to sell it for cash after waiting this long. They'll consider it a windfall and they'll hold it. Maybe 60% will hold, maybe 50%. So then you're looking at a 70,000 Bitcoin dump. And I think the market can easily absorb that, but it will be a hit. It'll be along the lines like if you dump 70,000 Bitcoin in the market, you're going to drop the price by $6,000, maybe less from where we are now. If the price is still around 20K, might fall to 15, 16,
Yeah.
if it's all at once. But that would not be a clever strategy for the executors.
Shoot, I tell you right now, if I was waiting this long for Mt. Gox, I'd sell it. I'd be like, I'm gonna take something off the table because I gotta pay bills. I've been scramping around for too long.
I guess
That's what
if you
would do.
bought it at like $100 or something, and it's
Oh.
just yeah. I guess it depends on what your goals are. I
I'd
do
be ticked
wonder.
off.
I wonder how many people that lost money there, stuck around crypto, or how many just sort of left because they saw a lot of money come their way and then it was just completely gone.
Yeah, well, I know a lot of the OGs that were involved in that, and they've been involved ever since. They just see it as a windfall if it does come back to them, but they've never left the space.
hmm It kind of makes me
If
wonder
you
if in like 5 years we're going to be talking about people like lawsuits getting settled that are originating like today. um,
Guaranteed. And I can tell you that it just goes to show you, like, because they declared bankruptcy, right? Is that how it worked? Chapter 11 went through the whole process, lawyers,
Yeah.
litigation. I hope that doesn't keep happening I'd rather just see some kind of like a merger or some type of like, some other big company absorbs a smaller company, people take a haircut and move on.
Right.
That's it.
All right, well, guys, we gotta wrap it up. I gotta go somewhere. But if you guys aren't subscribed, make sure you go ahead and subscribe. And also, we have the links down in the description below. You can go subscribe to Rob and James. Next week it'll be on James's channel. So Fridays usually we do it, sometime in the afternoon Eastern, and maybe late morning or early afternoon Pacific. But anyways, thank you guys for tuning in. We will see you guys next time. Bye.
Thanks,
Thank you.
everyone. See you.